morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. Amongst the many different things we do, these free mentoring roundtables are probably the most central. We've been doing them since the fall of 2008. It was a random experiment that resulted in us founding 1Mby1M, and it's now been 578 free roundtables like these. And then there are, thousands of roundtables in the premium program. So the roundtable mentoring has become the way we operate. And of course, since the pandemic, that's the way most people have been operating. So you will find recordings of all our roundtables on the YouTube channel. On Twitter, we're at 1Mby1M and at Romana, and today's hashtag is 1M1M. These are the call-in instructions. You're very welcome to participate. This is a roundtable, not a broadcast. We do have scheduled programming, but we also have usually time to do some Q&A, some discussions. We are going to start today's session with a conversation with Janam Mehta, partner at Campus Fund and at JSW Ventures. So we'll talk about both Campus Fund and JSW Ventures. Janam is in India. Welcome, Janam. Nice to meet you.
Hi, thanks for having me. Super stoked to be here.
So tell us about a bit of your background as well as what are you up to with the investments?
Sure. I think I started out first as an entrepreneur. I was 18 when I started my first business. I sold that, and I was super excited to be in startups because it felt new. That was like the second wave of entrepreneurship in India. When I was able to exit. And that's when I joined Mumbai Angels. I think that's where we actually connected.
Yes, I remember that.
Yeah, the first time when we interacted. And post that, I had another startup. Then I scaled another fintech company as a second employee. Completed my MBA and came back to India to join JSW Ventures and join Campus Fund. So that's been my journey till now. Let me give you a
Janam,
quick.
before we go to the funds, I want to ask you a little bit about your startups, and also since you've been involved with the Indian startup ecosystem for quite a while,
Sure.
talk a little bit as an overview of what you observe as the evolution of the Indian startup ecosystem, both as an entrepreneur and as an investor and participating in Mumbai Angels, etc.
Sure. Back in 2013, I would say that entrepreneurship and startups were quite novel. The quality of entrepreneurs, um, compared to the US, were still lacking some sort of maturity, if I must say. You saw a lot of uh, very interesting ideas, probably not enough capital. This was all in 2013 to 15 period. You had a few successes, right? A couple of big exits, but it was nascent. Um, I think that when I now look at entrepreneurship from an entrepreneur perspective and the quality of entrepreneurs, and also capital in 2020 when I came back to India, it is significantly different. I think the bar has been raised um, significantly higher. There are second time, third time entrepreneurs who've got successful exits, right? That's the first and biggest differentiation. Second is that you have product talent in India that is booming, given that in the last 5 to 7 years, you've seen interesting companies being built. Some have been acqui-hired, and you have people leaving from those acquisitions, having worked with US talent to start their own companies or become directors of product. So product talent has improved. India always had a strong, say, tech, IT culture.
Yeah,
So
developers, a lot of good
yeah,
developers all around. Yeah.
coding. And Okay, probably the nuance there I would add is that even in that, the quality, of coders, you can say is growing. Probably it's not there yet for an ecosystem as big as India, but it's growing. Um, so on the talent front, we saw significant boost, right? Your IIM Ahmedabads and IITs and Indian B schools as well, I think, started progressing and looking at startup ecosystem more seriously with the government push in 2016. And now in 2020, you're seeing, I think, probably now I can say that India's time to shine in the startup ecosystem is here, right? We are now, I think, increasingly going to create global products. You're seeing Freshworks as a classic example of an Indian SaaS company being listed on the Nasdaq, which is huge,
Yeah.
to set an example. And I think increasingly you're going to see a lot of platform SaaS businesses building for the world, Southeast Asia for sure, but I'm saying even for the US coming out of India. So significant. I mean, the last 7, 8 years in India for the venture space um, have been pretty incredible from
Yeah,
an
I think
entrepreneur's
so.
perspective and from capital perspective both.
Yeah. We have done case studies of companies that are India-born companies. Freshworks, of course, we know very well because Freshworks was incubated in 1Mby1M. But even beyond Freshworks, I'm seeing companies like on Tuesday, I think on Monday, I was talking to Raghu, who's the CEO of Yellow.ai. This is a
Yeah.
phenomenal company. It's
Yes,
a
I know
really
them.
kick-ass company, absolutely kick-ass company. QMath, have you seen QMath? QMath is a kick-ass company also. I mean, these are really, really world-class companies, I think.
Yeah, yeah, and what's exciting, I think, is that for the first time in India, uh, I think that belief exists that now we can build for the world. That
Yeah,
that
absolutely.
that that cultural change, is significantly important to have the confidence to go to a foreign country and say that, look, I think I can crack this, right? And playbooks have been made. You have, for example,
Yeah,
SaaS founders coming together to help other SaaS founders that are trying to scale in the US or other parts of the world. So knowledge is being shared quite openly, right? Which did
yeah,
not exist before, right? So if I may say, a community is being built. You have the right pillars being set up. Uh, you know, uh, Indian investors now are, I think, understanding how they should be looking at global plays from India, right? And
yeah.
you're seeing, I mean, there are so many companies that I can think of today that are already at probably a 50 million ARR that s-
Right, right. But
have
the
clients.
other trend that I think is also extremely interesting, equally interesting, is that the companies that are being built in India facing the Indian market, um, there are also very interesting companies being built that way. I mean, the fintech sector is really
Of
an
course,
interesting sector. The health tech sector is really interesting sector. The ed tech sector is really interesting sector. Of course, they're all very crowded sectors, but that also is bound to happen in a booming market. That's bound to happen, and then, in with time, it will become clear which ones really make it. Of course, there's a unicorn mania going on. There's a lot of, excessive funding, and I happen to not believe that just the ones that are going to get the maximum amount of funding are going to be the ones that are going to win those spaces. They have an advantage, which is a capital advantage. They also have a disadvantage of not having discipline of how to manage cash. So, so we'll see how that all plays out, whether they can manage cash and execute when money starts to dry up a little bit. Right now, there's correction going on. So
no.
but I
So
think,
your
but
point.
bottom line is there is movement. There's a lot of momentum.
Yes, and a few of the sectors that you did touch upon are quite unique to India, right? EdTech, for example,
Yes.
and is quite unique to India culturally because I'm sure you're
Yeah.
aware, and that there's a high focus in Indian culture on educating
Okay.
your children, right? And
Yes.
therefore, there is a propensity to pay and experiment, right? So we're
Yeah.
glad for example, Byju's, right? He grabbed the bull by the horn and he was able to build something so wonderful, right? That he can now solve for the world. But
Well, and
fintech again,
also the infrastructure for customer acquisition is coming together, right? I mean, how would you otherwise? I mean, today
Yeah, of
it's
course.
possible to acquire customers, of consumers, which was not there.
Of course, if I have to give you a quick and your viewers a quick background, right? Of course, this is possible because of India Stack and because of the internet-enabled smartphone penetration that's happening in the country. We're looking at around 650 million smartphones, 450 or 500 million internet-enabled smartphones, right? That's about
Yeah.
half the population that today has an internet-enabled like smartphone. And of course, I can go into the nuances of how many people actually are looking at
Buying.
outside of YouTube and WhatsApp, right?
Yeah.
And probably the like the funnel gets thinner, but I think the point being that people are experimenting, and if not today, then tomorrow or day after, they are going to get comfortable with their smartphones, how to use the internet, right? And therefore, that is a huge opportunity, which is why you're seeing so many edtech companies still raise such large rounds, right? I was speaking to an edtech founder, and he was so bullish on the fact that we are just scratching the surface yet. So, yeah, there are two sides to the coin,
Well, I
certainly.
think the other interesting thing is that when I started working on the Indian ecosystem, startup ecosystem in 2005, when I started my blog and the Forbes column, and I remember I wrote an article in Forbes about we should celebrate the Indian entrepreneurs, not the cricketers and the Bollywood stars. So, I mean, of
I
course,
know that's
now
very
we
true.
are celebrating. I think India
Yeah,
is
we are now.
celebrating
We are
in a
right.
very big way.
Yeah,
So,
I think you were ahead of your time, very honestly, right? And
yeah, and it was, but you have to start somewhere, and I think there was
and, and
the
I'll tell you
beginning of
something,
a.
right? And I'll tell you something that in India we're having a trend of making biopics, right, of sports people that have been successful, and film stars, probably cricketers. I think that there's going to be a time when we'll be making movies about
Entrepreneur
them,
biopic,
and that is a significant change, significant
huge change,
change. And
huge change.
these nuances are very important because a lot of talent is unlocked, when culturally taking a risk is accepted.
Yes,
You know,
huge
in
change. That change has
2013,
happened, and that was a massive change,
this
huge
is,
change.
yeah, but I still believe that in other parts of India, outside of Bangalore, say, and the metros, right? I still would like to see more entrepreneurship. I would still like to see young students, graduates take more of a risk. Like, our work at Campus Fund is largely focused on backing student entrepreneurs, right?
Mm-hmm.
And like recent graduates. So we are constantly looking and allowing a platform and infrastructure for these students to actually come and speak to us, at least, right?
Mm-hmm.
Brainstorm with us, kind of discuss and give them the comfort that, you know, because there are also horror stories. People get scared, they don't know if they should take institutional funding, right? And therefore, there's a lot of education that needs to be done as well in the tier two, tier three cities outside the metros.
Yeah,
But that cultural change is here, and we're very excited about that.
yeah, definitely, definitely, and also we see companies from the non-metro, six-stop metro geographies. Like we have a company right now from Chandigarh, and
Wow.
so and the thing is, this education that you're talking about, everybody needs that. First-time entrepreneurs need that education, right?
Yeah,
Because to me, the thing that I see constantly from where I sit, and we've been doing this for a very long time now, um, positioning is the missing expertise across
sure,
the board.
sure,
People kind of spend 2 years, 3 years, 5 years going after markets with a product that is not positioned properly. And if you don't have a product that is positioned properly, you would never achieve product market fit. You would never achieve velocity, and you would never be able to move past that kind of fit start kind of mode. So
yeah,
uh, that education alongside risk, people feel comfortable taking risks when you feel like you know how to put one foot before the other. That
mm,
that knowledge of putting one foot before the other is vital. And we are working on trying to, disseminate that knowledge at scale. You may
Yeah.
have seen we've done something on Udemy recently. We've released a bunch of courses on Udemy to get people started with, the case studies and understanding how people have done before. See, when you see people have done it before you start getting confidence that, yeah, I can do this too. Okay, here's how this guy did it and so forth. So I'm very bullish on the pan-India opportunity, the
Yes,
Assam and the
100%.
Punjab and the,
100%.
Rajasthan and so on.
Bhopal and Indore, and you have Chennai.
Odisha,
You know,
Bhubaneswar is doing well.
Right. Yeah, that's right. That's right. So yeah, the smaller towns in India do have a serious potential. Uh, and one, I think in all of these smaller towns will see significant companies coming up in the future. So
Yeah.
we are excited. Yeah, we are excited.
Tell us about Campus Fund and JSW Ventures.
All right. So first, I'll take JSW and then I'll speak about Campus Fund. So JSW Ventures is a $40 million fund. We are largely Series A focused. We do up to $2 million in the first check, 4 to 5 million throughout the life of an investment. We are largely SaaS and platform business model focused, covering enterprise health, consumer finance, agri industries. We are not a corporate venture capital, arm or a fund. JSW is an anchor LP in the fund, right? But we've
Mm-hmm.
raised institutional capital. So 20 to 30% comes from the Jindal family of the JSW group. For all those who don't know, they are the largest steel manufacturers in India, right? And now they're increasingly getting into different, they're like diversifying into different industries. So that's JSW Ventures as a fund. The good
Janam,
thing,
one question on JSW.
sure,
You said you're a Series A fund. What do you need to see? Let's say you're SaaS and platform focused. So what do you need to see in the
got it.
deal to write that check?
Sure, sure. So let's cover everything about JSW and then we'll speak about Campus Fund. So
Yeah,
let's focus on
exactly.
JSW
Let's do that.
for for
That-
for the next few minutes. Um, for JSW, I think what I look at largely is around 4 to 5 things, right? The first thing I look for is the scale, the market, right? Product market fit, and I'll try to define product market fit. I'll take a stab at it, right? I'm looking at the use of technology that creates a differentiation, and I'll again give an example for all of this. We are largely a capital efficient focused fund, right? Probably one
Mhm.
of the few. Our first fund was started 7 years back. That was a smaller $10 million fund. Today we've closed a $40 million fund, right? And one of the key themes for us has been backing entrepreneurs that are capital efficient, right? And I think the fifth thing that I'm looking at is the entrepreneur's domain expertise and his grit or his tenacity to execute. Right now, let
Mhm.
me give you an example of what I've just said. Um, uh, we backed a, I led a recent investment in this company called CureSkin, right, which is a YC company. Khosla has invested in their seed round, and we led their Series A investment. Now, CureSkin uses artificial intelligence uh, to scan or diagnose your skin or your face and tells you what sort of like blemishes, acne, dark circles you have, and gives you product recommendations from their product portfolio to solve that, right? It's a very interesting use of technology to solve a serious problem, which is access to dermatology, right? If you look at the
Mhm.
problem in India, there is one dermat for every 1.2 lakh to 1.5 lakh people, right? And that is serious a challenge. Most dermats are tier one focused, right? So they live in the metros. Now, what do the tier two, tier three, tier four city towns people do? They have the propensity to pay. They would like to pay, but they would like to get the right advice. So they go to their
Mhm.
chemist. They land up experiencing something horrible with their skin starts swelling up, or you have more acne or breakouts, etc. Right? And they're actually using technology very well to solve this problem. So it's very close to what we believe, which is using technology to create a serious differentiator. It's a
Mhm.
D2C company, but a tech-led D2C company. So super interesting, right? Let's take the use of let's take the other thing that I said, which is scale or market size, right? We backed Purple.com, and happy to announce that today it became India's 102nd like unicorn. They were just valued at 1.1 billion. So that's our first unicorn in our portfolio. Uh, and the market size, is like massive. We're looking at if you look at a top-down approach, right? When we invested in them, uh, 20 or 30% of e-commerce transactions were happening in the beauty personal care segment, right? If I'm not wrong, the number was approximately 8 billion, right? And from that, when we invested, only there was 5 or 6% internet penetration for the beauty personal care segment, which is growing at 20% CAGR, and post-COVID, it's like 25, 27% CAGR, right? The market is expanding at such a large or such a rapid scale that we're not worried about the market size, about that industry, especially the internet enabled e-commerce for beauty personal care. So that's an example of market size that gives us comfort that we are looking at next 10 years is going to keep scaling at 20%.
So
uh, yeah.
talk to me about, in terms of validation, where does a company need to be before you write your $2 million check or
Correct.
thereabouts?
I was just going to come to that, right? So product market fit, right? And then this is the tough one, right? And I don't think the way I look at product market fit, I look at revenue as a sub segment of the user behavior and traction that you've achieved. Now, for
Mm-hmm.
example, if I look at a SaaS company, I'm trying to look at what is the um, net dollar retention. First thing, I'm trying to look at cohort retention. I'm trying to look at the usage patterns for the
Usage
last 6 months.
statistics matter a lot, whether, not just the dollar amount or the revenue amount.
So for a Series A opportunity, I think when I wear my Series A hat, I'm looking to understand if they've been able to hit critical mass, or they've been able to get enough traction for liftoff, right? Have they created this small cult that can't live without their product, right? And
Mm-hmm.
anything that helps me validate this concept of a small cult, I am interested in, right? So if I look at platform businesses, I'm not looking at the number of transactions, but what I'm looking at is how many products you've been able to upsell, cross sell, right? How have you used this data, right, to create platform efficiency, or say platform network, right, to ensure that you can compound on your learning and create a very unique offering for them in the long run. So platform businesses are evaluated slightly differently as per the nuance of that
Platform is
industry.
different.
Yeah, and SaaS companies are slightly different, right? But in all of these, I'm trying to look at, have you been able to hit that critical mass for liftoff, right? Like it's that valley of death, and then have you been able to get that jump up, or are you seeing your product being used in such a scale that you can't keep up?
Have you invested in a platform company?
Uh, so I would say Purple is an e-commerce platform company, right? We are looking. HealthPlix is a very good example, right? So they're in EMR, but the data that they use from the EMR, they kind of use that data to help pharma companies with their research and give them
Mm.
insights. So that's a very good example of aggregating data from their SaaS product and making it a platform business for the pharma companies. Uh, mm,
It's not very easy to get platform companies to go to market as platform companies before Series A.
Yeah, yeah, correct. Now, that's an interesting nuance, right? Um, let's say they start out as a e-commerce company, right? And
Or a SaaS
that
company.
e-commerce, I'm sorry, can you
Or
repeat
a
that?
SaaS company.
Or a SaaS company. I mean, SaaS companies are, I think, SaaS companies moving to platform companies are quite obvious, right? Like for example, if you have an HR tech company, they can cross-sell,
But
upsell.
that happens much later, though,
Yeah, it
usually.
happens much
Usually
later.
they come up with one product and start
Correct,
selling that
correct.
product, getting that business going before they even think about. I mean, I'm having
Of course.
conversations with SaaS companies that are very sizable and they're still not into platform yet.
But I would probably say that SaaS companies thinking of platformizing their approach uh, are those companies that have some sort of a market share, or they have a strong brand. Like for example, in India, we have this company called Darwinbox, which is an HR tech company, and I'm seeing slowly that they're probably moving into some sort of a platformized
Platform.
approach,
There
right?
are really only three companies that have made a real shift from a SaaS company to a platform company. One is Salesforce.com, two is Twilio, and
Yeah.
three is Atlassian. And I would say those are the only three really well executed instances of being a
Let
true
me ask you a
platform
question
company.
there. Let me ask you a question there. How do you define a platform business in a SaaS product? Would it be having a marketplace of third-party applications? Is that a
Yes.
definition? Yeah?
Yeah, as part of the definition. Part of the definition is you have to have the stack, the developer stack ready such that third-party ISVs can build products on top of that platform. And
Sure.
then you need a marketplace where they can sell
Correct.
those
Correct.
products. Now, there
Correct.
is a nuance that's happening out there, which is a lot of SaaS companies are opening up their platform for extension within their enterprise customer base. So if you look at ServiceNow, ServiceNow tried to do this kind of platform strategy, the ISV ecosystem marketplace platform strategy, then they abandoned it
Yeah.
and they went straight into the enterprise. But within the enterprise, they have
Able to
APIs
provide this.
through which to
Yeah.
expand
Sure.
the
Sure.
scope of the
Sure.
application. And that strategy is followed by more people. Zendesk is
I think I
following
lost
that.
you. Can you hear me?
Did you lose me? Can you hear me? Can you
Yeah,
hear
I'm
me?
back. Did you? Yeah, now I can hear you. Okay,
You
perfect.
can hear me? Okay. So what I was saying is that that strategy is followed by more companies like the Zendesk, the HubSpot.
Yeah.
There are a lot more companies that are following the API integration strategy within their customer base. But the real, true ISV PaaS strategy, I have seen very few instances of real ISV PaaS strategy. And
Yeah,
it's very hard to do in the Series A timeframe. It comes later.
yeah, and I think that they're able to largely pull that off because of either some sort of market share or the fact that they have a strong brand name, right?
Yes, that's
People
right.
are able
That's
to.
right. Market share,
Yeah,
absolutely.
yeah,
Absolutely.
yeah. And that's the metric again, right? At a Series C, a Series D, right? At a Series A, you would always think that can this SaaS company go on to lead the vertical it's operating in, right?
That's right.
And you look at, probably one of the things is the horizontal versus the vertical approach of building a product, right?
Yeah.
And what I would say is that lot of horizontal products have already, taken shape, and you have large companies that are playing across the field.
Horizontal is a
Probably
very tough go-to-market strategy.
exactly right. So it's always easier to crack one vertical and then expand, right?
Absolutely.
Uh, and
Janam,
again,
talk about campus funds. I don't want to miss talking about campus funds.
so that was JSW Ventures. Now on Campus Fund. So Campus Fund started out uh, with uh, with interestingly, the first company that I led or I co-led from Mumbai Angels, the founder of that started Campus Fund, right, when she
Okay.
came back from LBS. And it's based on the dorm room concept, basically, right? So we're going to like universities in India, tech and management, like universities in tier one, tier two cities, and tier three cities, onboarding students that behave as ambassadors and deal scouts for us. We have an IC that is set up by students or by recent graduates, and we take a call whether we would like to invest in that company or not. So they go through some bit of a filtration process, and we
Mm-hmm.
invest 50 lakhs, right? Which is through a safe note, right? This is generally at a pre-seed seed level, right? Post paper plan, but around the MVP stage, right? Where we know that there is some sort of a product being built out, right? But it's not completely fleshed out or it's not live yet. Uh, what we've tried to do is we've tried to build synergies across the Indian ecosystem. So we have a lot of partners from existing VC funds that support us, that speak to us at Campus Fund in terms of interactions, in terms of learning, in terms of their take on certain sectors and how to look at pre-seed, seed opportunities. And I think that we've been able to actually do quite a good job. We've now invested in 7 to 8 companies, of which 4 have already got follow-on investments from large
Okay.
Indian VCs, right? So we've been quite active, and I think that we are trying to put together this student entrepreneurship ecosystem in India. So
How big
that's
is
largely.
the deal flow for this?
Can you repeat that?
How big is the deal flow? How many
Uh,
companies are circulating in this mode?
Wow. So we have approximately 30 people that look at companies for us, including people that sit on the IC, that's including myself and each and everyone. So I think last year we might have spoken to probably 500, 600 startups, right?
Okay.
And yeah, we have a 1% conversion rate, right? So yeah, that's six
Yeah.
to eight. Yeah, correct. 6 to 8 companies that
Good.
we've invested in.
Very interesting. All right.
Yeah.
Well, very interesting in nuances and insights into the Indian ecosystem. Thank you, Janam, for sharing.
Of course, I'm happy to answer any questions if you have. If you want me to deep dive on something, or anyone in the viewers have any questions, I'm happy to answer.
So let me find out from Maureen what is going on. Um, Manisha is supposed to pitch, right? Maureen, could you advise us on what your program situation is next? I think there's an audio issue. There's a WebEx probably has released an update. I have a lot of difficulty logging in today. She's having audio issues. You've not so who's so what do you want me to do? Manisha is not scheduled. Okay, got it. All right. Okay. No, I'm just looking at the public messages that Manisha is sending and responding to that.
Are you able to hear me? Am I audible?
We can hear you. Yes.
Yeah.
You have
Hi there.
you wanted
Yeah,
to.
so I'm actually not scheduled for today, but I did think I would at least listen in. WebEx did install some sort of plugin, and I apologize. I was having issues with the audio, and I had to rejoin twice. But this was a really insightful conversation, and I look forward to presenting my deck next week. And Mari, I think
Okay,
I'm on for next week. If I'm not mistaken, I just need to get through my deck.
that's fine. Manisha, where are you joining from?
I'm in Boston.
You're in Boston. Okay, very good. Very good. So Maureen, no one's on the schedule today, right? To pitch? I just want to make sure that I'm not skipping anybody's scheduled slot. I have a very full day today. I have like 3 calls back to back right now. Okay, so everyone wanted more time next week's slot. That's fine. Very good. Actually, that's very helpful for me because I have an absolutely chock-full schedule today. Well, Janam, we will stay in touch, and hopefully we can do some stuff together, and let us know if there's anything that you want to do with us vis-a-vis your campus fund efforts, and we have a scalable way of teaching, so by all means, we'll be happy to help you out where you think
we should
there's
be in touch. 100%. Probably I will write to you sometime next week and see if we can like get on a call and like discuss this further.
Absolutely. So folks, before we adjourn, I'm just going to give you a very quick summary of, I know a lot of you are pitching next week and the week after. Just go to 1Mby1M.com even before you pitch, and you'll find lots of information. And there are a lot of material that will help you prepare your pitches. The self-assessment is basically VC due diligence questions. You can prepare yourself just by using the free tool that is available on the website. Use it. Of course, the blog is free. There are so many entrepreneurs. I was talking to the founder of Yellow.ai, and he's been following this blog for, since like 2015 or something like that. And there's so many entrepreneurs who have just learned by following the blog. So you don't, if you don't do anything else, please study the blog on a regular basis, and you will, you'll have a lot of information, a lot of knowledge just seeping into you by following the blog. Of course, a more structured studying, you can use the books. There are 12 books, all case study based, all available on Amazon. These roundtables happen every week. You can come to them as many times as you want. You can pitch for free once. After that, you need to go into the premium program where we offer you extensive methodology guidance, a full curriculum. The curriculum is over 3,000 hours worth of recorded material, and it's packaged to be a very efficient place where you can learn. You can basically travel the really steep learning curve of first-time entrepreneurship. It's a very steep learning curve. There's a ton of stuff that you need to learn. And as we were talking about positioning is where a lot of entrepreneurs get tripped. You have to learn positioning. There is no choice. You have to learn positioning. So we emphasize greatly on positioning. We have a terrific Rolodex. All premium members have access to our Rolodex for business development, potential customers, channel partners, investors, media analysts. We do have an investor policy that you should study on the website as well. I was talking about self-assessment earlier. There's a free bootstrapping course pinned to the top of the blog. It's a less than 1 hour course. Please study it. These days, entrepreneurs do best if they follow some method of bootstrapping. We have in our curriculum, in our methodology, we have multiple different ways of bootstrapping. There's bootstrapping with a paycheck, there's bootstrapping using services, bootstrapping by piggybacking on a past platform, bootstrapping to exit. We have all kinds of bootstrapping, creative bootstrapping tracks. All of those are fine. Another learning material source is Udemy. We have released 30 courses on Udemy. You can go start learning there, and then get comfortable. Then you can come to 1Mby1M Basic, where you get access to the full curriculum. There's a lot of self-learning capabilities available. So go to the website, dig around what to expect from premium, basic, the free resources, video FAQs, all of that. The curriculum is described in great detail. It's a 100% case study-based curriculum. Thousands of entrepreneurs since 2006 have participated in our case study program, and you have access to all of that material in the curriculum. It's very inspiring, right? You're listening to an entrepreneur telling the story of how they put one foot before the other, starting from scratch, starting from nothing and building something fantastic. And that's very, very inspiring. And it gives you the confidence that you can do it too. Please please do study the investor introduction policy. We don't, just by joining the program, we will not send you to investors. You need to become fundable, and not all companies are fundable. Not all companies most certainly come to us in a fundable state. We work with you, and some become fundable, and then we send you to investors. We do work with many hundred investors. Our methodology is lean, capital efficient, bootstrap startups. The philosophy is bootstrap first, raise money later. Our mantra is do not go to investors as beggars, go as kings, which means you try to do as much validation as possible. And that's it. So the next 3 roundtables are June 16th, 23rd, and 30th. And then if you have questions about the program, you can contact Irina at 1Mby1M.com. She will answer any questions by WhatsApp, Skype, phone, whatever you want. And that is all for today. I will see you next week. And if any of the premium members are on this call, Monday night is the next premium roundtable. So I'll see you then. Bye, everybody. Thank you, Janam, for coming. We will be in touch.
Thank you so much. Thanks.